The Bitcoin journey is difficult for most people because firstly it involves admitting you were dead wrong. I want to share a video here with you in a second of someone who actually has taught finance and wealth creation for a couple of decades, and also someone who is CEO of one of the largest art dealerships on the planet, so an extremely wealthy man. Check out what he has to say. Most people don't understand money. They don't understand the money printer. I'm in traffic here now, rolling along with all these people going to work for money, and none of them understand it. They're exchanging the majority of their life, their hours, to acquire something that they've no fundamental understanding of, and they wonder why the game is rigged against them. Have a listen to this, guys. Let me know what you think.
Traditional finance people are starting to wake up to Bitcoin en masse. Which brings me to this clip of Tad Smith, CEO, investor, and finance professor, talking about his Bitcoin journey and the startling realizations that resulted from it.
I didn't realize that if the average year the money printer goes, call it 8 to 10%, even in the Western countries, even in the OECD nations, and the average return on the S&P 500 is, call it 9-ish%, including dividends, maybe 9.7, maybe a little less, that it means that all of the work of the S&P 500, all of the value created there is actually the money printer. That to me was startling. I mean, to think about that, the fundamental notion that in a closed system or even an open system, when you're printing money at the rate of 8 to 10% a year, everything is losing value, and the things that appear to be gaining value are not gaining value. They're just keeping you even. So you can put all your money in the S&P 500 and you're not gaining any relative wealth at all. That's a startling insight. I mean, when you really think about the entire value of the S&P 500, on average over a long period of time, not even a long period of time, is equivalent to the money printer. That's, to me, a shock. And it was a shock that said, oh my goodness, how do you think about creating wealth that is relatively greater in this economy? And you have to look hard. The other thing you can imagine is I could tell you about Sharpe ratios and diversification. I could tell you all these different things. You know, it's interesting. You can take a concept like diversification of risk, and at a top level, it can be a very powerful and useful tool. But if you are so focused on the mechanistic aspect of that, you can step back and miss the forest, which is in a highly diversified portfolio, it's unbelievably hard to pick up relative amounts of wealth. Diversifying your portfolio, however you do it, is by and large going to reduce your incremental gain in wealth, irrespective of the Sharpe ratio. It's concentration of capital in specific bets that outperform the money printer where you actually create wealth. That was a shock to me. I just didn't get it. I didn't understand it. Even though I taught finance for 20 plus years, I'm still a professor at NYU Stern, at Stern Business School. I've taught strategy and finance for technology, media, and entertainment companies for 25 years. I have actually more than 1,000 former students. And I still didn't get it until I'm age 58. That's the Bitcoin journey.
So if 58-year-old traditional investors, ultra-high net worth individuals, companies, institutions, and nation states are waking up to the real value proposition of Bitcoin, this makes it clear that we are still firmly on the launch pad, and this run hasn't even started yet.
Effectively speaking about, if you don't understand it, is the S&P index is basically a basket of the top 500 highest performing companies in America. And it's where most pensions and traditional investors will invest their money. Like if you have a pension, I guarantee you it's allocated to the S&P index. Well, it should be, because traditionally it's been the place where you're guaranteed sort of 8 to 10%. Now what he's talking about is if the money printer is expanding the money supply by 8 to 10%, well, all your apparent gains that you think you're creating wealth, you're not actually creating any wealth. So although your unit of your pension increases, the purchasing power doesn't, because the cost of living increases every year. Your euro buys you less stuff. And most people don't get that because they haven't studied Bitcoin, and Bitcoin explains all this. And the second point is diversification is a fallacy. We're taught, oh, be diversified. You go and see your financial advisor, you go, oh yeah, we're going to diversify into this. Nobody ever created wealth by being diversified. You don't create wealth by owning 100 businesses or trying to start 100 businesses. You start one, you concentrate, okay? And again, some people will think, I'm coming into crypto, I must diversify. Not just Bitcoin, because I'm taught to diversify. It's all wrong. Study Bitcoin, it'll change your world, and over time, it'll change your life. Dinny out! And if you learned something from this video, make sure you hit the follow, share it with your friends, try and teach people a little bit about Bitcoin, because everything they know about it is likely incorrect.